Good morning, options traders. So I ran across a trade this morning that I wanted to share. Again, I urge everyone to trade these in paper, see how they move, understand what happens with them. But this one was pretty intriguing. It's in Home Depot and it expires here this week. So it expires on Friday. What I found unusual about this is that I was able to fill this trade live. It's a butterfly where my short strikes are at $3.55. My long strikes are $2.50 away. So I have a risk of $2.50 or $250 in this trade, less the credit that I take in. The crazy thing about this is I was able to take in $2.18 in credit on this $2.50 wide spread, which means that my max loss on this trade for a one lot is around $30. That's kind of nuts for something this short term. Now, it's important to note, you see these warning signs here. Those warning signs mean that there is low liquidity and very wide bid-ask spreads on those particular strikes. So you have to put out an order that you are willing to fish. And what I mean by that is you either get filled or you don't get filled. This is not an order that you do market on. It's not an order that you chase. And again, I want everyone to specifically look at the width of the spreads. If you come in and look at these, we're going to see that spread goes from $1.91 to $2.41. So again, for paper trading, pick a price that seems reasonable, but maybe toward the upper end of that ask, because if you place an order out there to see if you get a good fill, again, you don't want a bad fill. You don't want to be filled in the middle here. You only want the best of the best fills. So for paper trading, select a price that's close to the ask on these. And then that will give you a P&L diagram that looks like this. Now, I have to know going in with low volatility and wide bid-ask spreads, this is not a trade I'm going to be able to successfully adjust, most likely. So I know going into this that I am accepting whatever I get on it. If it ends up being a loss, it ends up being a loss. If this thing just rockets higher, rockets lower, oops, my bad. But the math right now, when I can get a potential max profit, again, I'm not shooting for that because that means that we'd have to expire right at that point on Friday. But regardless, as this continues to decay throughout the week, the T0 line is going to be up in here somewhere. I should be able to get a pretty nice profit out of this if it stays in its range. So I just wanted to share this concept trade, and specifically the thing to note is sometimes you can find an extremely good bid-ask, a wide bid-ask spread, but you can get filled on it with a very favorable price. Again, in this case, $2.50 wide spread, and I put an order out there for $2.18, and I actually got filled. So take care, everyone.